The stock market. Everyone wants to get rich, and many have heard that the stock market is the road to take. But do you really know what it is? Before you start your journey, spare a few minutes to let me open the door to a new world. Risky, but worth it. Ever been to a bakery and seen a sliced cake? Now consider the whole cake to be a company. The slices are the pieces you can buy. The stock market is like a bakery, where you have many different types of cakes, and you can buy different types of slices. These slices in the stock market are called shares. When you buy a share, you buy part of a company. When a company lists itself on the stock market, it has to give out a certain amount of shares to the retail investors, meaning any individual person and institutions. This listing is called an IPO. If you're late to that party, you can, however, buy it from someone who bought it then. Majority of companies start with a fixed share rate. The price increase is then dependent upon their financial results. If the earnings are positive, investors will receive the news and fuel in more money, causing the price to increase. If the earnings are dismal, people will start selling their shares, which will cause a decline in share prices. A stock market is a free market, and free markets run on investor emotions. An economic turmoil or a war can be disastrous for the market, as many investors will try to sell their shares to reduce their losses. This will in turn cause the market value to decrease, as the sellers will increase in numbers, and no one will be willing to buy at that value. Such a market is called a bear market. The bull market, on the other hand, is when people are optimistic about the country's economic future and start pouring money into different companies, causing the market value to improve. Nowadays, it's quite easy for a person to trade on the stock market. Want to fulfill your dreams and financial goals? Stay tuned for that in the next video.